Hey all, good morning. It's 25th of May 2022 and it's a beautiful Wednesday out here. Let's get started with our daily update. So let's start off with the headlines first. Goldman Sachs Group cuts CRISPR Therapeutics price target to $46 from an earlier target of $52. This was done recent research report that was sent to their clients on Tuesday, according to news reports. And brokerages in general expect CRISPR Therapeutics to post a quarterly sales of 4.23 million for the second quarter. This is the expectation regarding CRISPR. Apart from this, I don't have any new CRISPR news. There are those small news items here and there about tomatoes making vitamin D without sunshine and so on. But there's nothing major coming up from CRISPR sector at this point of time. So that said, one of my major fears is coming true. That is the US housing market has dropped sharply. So single family home sales fell around 16.6% in April. That's a very steep drop, and it's dropped to around 591,000 according to the Census Bureau, the data that was released on Tuesday. New home sales in March were revised downwards significantly from 763,000 to 709,000. That's almost 54,000 down. That's a significant number. And all this is coming from very reliable sources, which is the Census Bureau. So what this means for the overall economy is that people are going to be having to pay higher rent, because those who are thinking of moving from a rental accommodation into their own are going to stay put. And new people who want an accommodation are not able to buy, are going to compete in the renting market, where the pool will grow shorter. So that is one. The second one is that the homes which have been insured and mortgaged by banks are going to come up for foreclosure. There has been a tick up in the houses that are scheduled for coming for foreclosure. So when foreclosure homes come into the market, that means there's a kind of fire sale going on, which also means that the home equity line of credit, which is used by many people to buy big capital items for the home, like a car or a home renovation or a vacation, those kind of things are not going to happen as frequently as they used to happen earlier, not only because the value of the home has gone down, therefore home equity line of credit is constrained, but also because of the fact that the interest rate is higher. So this is a very bearish aspect for the market, in my opinion. So the other aspect we have to keep in mind is that the Fed is tightening the mortgage-backed securities refinancing. So banks will have less money to lend to buy homes. So all of these factors are working together to push the housing price down. So this is the ideal time for anybody who has got money to buy a house in the United States. And the worst hit places are the ones which were the most pricey. So parts of Florida which were very pricey and which are attracting a lot of people from high cost areas like New York and all will also suffer, despite not being high cost areas, because all those people who bought in there are also moving back due to the change in the demographics as COVID recedes. So there's a whole lot of factors going there. So I'm not happy about this development, but it is there and we can't do anything about it. So that said, so the next news is that Elon Musk has potentially accrued a loss of around $40 million so far on the Twitter purchase deal based on the price that he had quoted. And he was supposed to have a profit of 1.1 billion accrued. So these are all book profits and book losses, so it doesn't mean much. But if he did go through with the Twitter deal, then he's looking at realizing a loss of $40 million, because he would be buying at a higher rate than what it is quoting right now. So that's out there. And also it seems that Tesla stock is getting a lot of beating because of the way Elon Musk has handled himself. And it seems to be breaking through a lot of technical levels, and might be a good purchase if Elon Musk learns his lessons and decides not to get into politics and decides to focus on the areas in which he has been very effective: SpaceX, Tesla, the Boring Company, the roof. He doesn't have to change the world. He's already changing it by working on environmentally friendly technologies and space technologies and all those things. So I think he has got to limit his bandwidth, and Tesla stocks will start picking up again. Another thing that has hit Tesla stock is the Shanghai lockdown, because the Q2 deliveries are likely to be much less. So that's also there behind it. It's not just purely Elon Musk's behavior, because many investors don't care about the CEO behavior. They are just caring about the money that they are making. So those investors will continue to invest in Tesla regardless, and there are many of those. So if you are looking for a real reason, it is the Shanghai lockdown. That's the one that is pushing the pricing down, because the investors who don't care about the CEO behavior are the ones who focus purely on the money aspect, and they are the ones who will be dumping Tesla at this point of time. The ones who believe in Elon Musk are going to continue pumping the stock and trying to buy more when it falls. So that's the dynamic I see. And today I read 3 different opinions about the inflation. One of them says that when you look under the hood, you will suddenly find that the inflation is way lower than you have been expecting, which implies that the Fed should go very slow. And the other one, which says that the Fed should just pump up the interest rate 100 basis points in the next 2 or 3 sessions and bring this raging inflation under control. And the third one, which I have seen more often, is not even a prescription. It just says that the Fed is behind the curve. That's all it says. The implication being that the Fed has to increase the interest rates. So these are the wide-ranging opinion about the Fed and what he should do about the interest rates. So given all these things, I feel that it's a daunting task for the Fed to continue doing their monetary policy activities and decisions, because there's going to be a lot of pressure on them, and if they get it wrong, there's always going to be one faction which is going to be able to hammer them. So it's not an easy task. So Fed is going to come out with minutes, and in anticipation of the Fed minutes, the market futures have already fallen. I will talk about the futures as we go ahead. But first, I would like us to have a look at the fear and greed index. So if you look at the fear and greed index, you will find that we are at a level of 8, which is extreme fear. Yesterday we were at 13, and a week ago we were at 15, and a month ago we were at 32. 32 would have been somewhere at the higher end of the fear side and very close to neutral. And a year ago we were at 29. So we have been in this fearful zone for almost a year thanks to COVID. And at this point of time, looking at where we are, it seems to me that we may probably be bouncing along the bottom, and maybe a couple of dips here and there, and then consolidation. That is my opinion, and we'll have to see what is going to happen ahead. So let's go and have a look at our Nasdaq and other indicators. Nasdaq futures are showing a dip of 63%, and that's around 73.5 basis points. Doesn't look great, and 63 is slightly on the higher side, so I wouldn't say that it's going to get washed off before the market opens. It's around 8:28 a.m. right now, and let us take a closer look and see what the trajectory is looking like. And let us see our candles here, 25th of May. So this is the latest candle. So it's kind of consolidating. If I can see here, still in the consolidation mode, it's range bound. So it has been range bound. So it could probably go all the way down to 11,679, or it could open at around 11,708. So there's a whole lot of possibilities out here. So at this point of time, I'm thinking that it's going to be bearish. Let's go and have a look at indicators and see what they say. In indicators, I'd first like to look at oil. Oil prices are going up. And if I go back to my 1-year time frame, you can see that we are still struggling to break through the resistance at 111.01. We have been at it for 4 days consecutively. And we have the support from the 9-day, 20-day, 50-day, and 100-day exponential moving average. We also have a horizontal support at 107.52, and the lone resistance that we have out here at 110.96 is keeping everything constrained. Right now, the oil is at 111.02, but I don't consider that it has broken through the resistance. We'll have to see it clearly break through it. And if you look at the MACD, it doesn't seem to show that there is going to be a breakthrough above the resistance level today. However, the momentum, which is above average, indicates that there is a potential for breaking through. We'll have to see what happens when the market opens. Probably we are still waiting to look at which direction to go. Now, if I look at a weekly time frame, let us see if we can find any clues out there. So if you look at the weekly time frames, you can see two doji candles. For the last 2 weeks, we have been contemplating whether we should break through, and the week before that it was the bulls trying to keep it down, but the bears succeeding in coming all the way up to the resistance. And the week before that also, this line had been performing a big resistance. So the minor resistance that we had plotted appears to be quite stronger than I imagined. And today, right now, we are still having indecision. We'll have to see what happens when the market opens. If you look at the VIX, which is a real-time VIX that we have here, you will see that the VIX is also coiling and consolidating between the range of 33.77 and 27.20. We are bang in between today. We are better than we were yesterday in terms of VIX elevated level, which means that conditions for Nasdaq are worse today than they were yesterday. So that's the reading I have from here. MACD is still bearish, but momentum is above average and picking up. So that's what is going to push the MACD across the signal line into the bullish zone, in my opinion. So we should look at increasing VIX given the bearish tendencies that we have seen so far. If you look at put call ratio, it's again in the bear side, it's above 1, so marginally bearish. It doesn't give us much. Let's look at the US dollar index. US dollar index is going up, and it's being constrained by the 9-day and 20-day exponential moving average, and momentum is above average for US dollar. So there is a good chance that US dollar is attracting funds, and therefore those funds might come from gold, crypto, and the stock market. So that's another possibility which we have to keep our mind open. So US dollar index is pointing bearish, whereas if we go and have a look at 2-year yields, you can see that we are still within the range of yesterday, but we are picking up. So if a 2-year US yield picks up, that's not good for Nasdaq. Let us look at the 10-year yield. 10-year yield has come down, so this is good. In the long term, people are expecting things are going to be much better. So overall, I would say that the yields are not either bullish or bearish. It's just neutral, because the 2-year seems to be indicating bearish trend, whereas the 10-year is bullish. So I'll differ on that by saying that it's a wash. Let's go on to QQQ and see what's happening pre-market. Pre-market QQQ is down minus 69%. So that seems to indicate a bearish trend. And also our support, which was at let me see where it was. Support was at 288.41. That is what is constraining us today. It supported us in the last 3 sessions. So I'm going to mark this into a resistance, and we had to break through this resistance. And it's a toss-up out here because momentum is falling and it's below average, whereas we have the MACD, which is bearish, going parallel to the signal line. So given that the momentum is down, I think QQQ is QQQ open is bearish, and also indicator seems to show bearish open. It may pick up later in the day, but right now the open seems to be indicated as bearish. It's around 8:33 a.m. Market opens at 9:30, almost an hour to go. If I was to look at S&P 500, when I look at S&P 500, I can see that the MACD is crossed over to the signal line. However, the momentum is weak and below average and pointed downwards. And we also have a support here at 389. I think it is 389.67, which is going to give us a bounce back in case we came down. Our 9-day exponential moving average is our next resistance. And also, if we go to the next level after that, if we manage to break the 9-day exponential moving average, we have a minor resistance at 406.5, which becomes a bit stronger because the 20-day exponential moving average has merged with it, and it's going to provide a lot of resistance. So the upper cap for us is 406. But I suspect that today the market is likely to go down because the pre-market value for S&P 500 is down 0.38%. That is $1.37. So if that comes to be true, then we have got bearish indicators there also. With that said, I think we should go and have a look at our cryptocurrencies and gold. So I'm going into the crypto sector and looking at gold. Gold has lost value. It is forming a bearish candlestick pattern, and if the trend persists and if we remain in the same configuration, then it indicates the bearish outcome ahead for gold. But at this point of time, it seems money has gone from gold into US index. That can be seen here because US index went up, and we still have support here at 1813.89, and we have a resistance at 1871.01. So that's the range in which we are moving. MACD is bullish, but momentum is not supporting. It's below average and going down. So it seems US dollar index is taking the money out. Bitcoin is slightly positive, and it's still being supported by this green line out here, which is a horizontal support at 28,993. And we are constrained by the 9-day exponential moving average. MACD is turned bullish, but momentum is very, very weak. So I think Bitcoin is again going to take cues from Nasdaq when the market opens. And if US index is dragging funds from gold, it's likely to drag funds from Nasdaq as well as from Bitcoin. So that's the way I'm looking at it. I may be wrong, but I would prefer to err on the side of being bearish than being bullish, because being bullish might have higher risk of losing money in this kind of a market. With that said, I would like to go and have a quick look at our genomic stocks and see what they are doing. Let's start off by looking at the genomics sorted in the order of the gainer at the top. NVS, Novartis is at the very top. You see the very strong movement that we have had. And if you notice, all the four top stocks out here are companies which are big pharma. They already have products in the market. They are paying dividends. They do share buybacks. They have a strong balance sheet. So all of them are doing relatively well, even in this choppy market. And as you can see, we broke through another resistance yesterday. So I'm going to convert that into a support. So our next resistance for Novartis is at 92.79. When we look at the MACD, it's also bullish. Momentum is also picking up strongly. Novartis is doing well. Pfizer is doing well. It has got strong 4 green candles, one after the other. Its major resistance is going to be this diagonal line, which is coming up next, which has supported our bull channel. So we are in 2 bull channels as far as Pfizer is concerned. If I zoom out, you will see that our original bull channel was this one, then we fell out of it, and then now we are creating a new bull channel. And these are the 2 bottoms that I can visualize if I were to pull this out here. So we have 2 bottoms, and there are multiple touch points out here. If you zoom out, you will see multiple touch points. So if we zoom out, we'll see multiple touch points out here, 1, 2, 3, 4, and there's a touch point out here as well. So I'm going to just pull this out here to put it properly. So this is the new slope on which we are going. It's again a bullish channel. So this stock, Pfizer, is in a good shape right now overall. Regeneron is up 0.60, very, very steep rise. And our next resistance is at 688.68, which is this diagonal red line. And again, MACD is bullish, momentum is picking up, so Regeneron is likely to get something today. Vertex, again, positive of 0.05 as of yesterday. MACD bullish and momentum also above average and picking up. Our next line of resistance is going to be this line of support in the previous bullish channel. Again, we are trying to enter into it. We are trying to enter into that bullish channel. In the meantime, we are forming another very, very steep bullish channel on the side, which I'm afraid to use because they are not sustainable. So my outlook for Vertex is going to be that we are going to get back into the original bullish channel and continue moving along that. That's what the market is trying to do. When it comes to IDNA, the ETF for genomics, you can see that if you look at the 2 ranges that we have drawn, the upper range and the lower range, we have been in it for the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days. So we've been there for 13 days. So today we are likely to fall because the momentum is down and there is no pre-market trade, so there is no enthusiasm as such. MACD is bullish but moving towards the signal line. So in its downwards journey, its first support is going to be this diagonal green line. So it's going to be at 27.95. So you can expect that we either end the day at 27.95, or if we go down, we are not going down below 26.58. That's the range I would look at for IDNA. And IDNA being bearish at this point of time and having less enthusiasm, I would think that that's going to be the case for the entire genomic watch list that we have got. But in our genomic watch list, I want to go through some of them just for the sake of completeness and to keep in touch with what's happening with our genomic market. So if I look at this particular chart out here, again, all I'm seeing is consolidation. So as you know, I've been talking about us having reached close to the bottom and we're going to be having consolidation. I think we are almost there, because if you see, we have been falling steeply, and then somewhere from 15th of March onwards, we have seen some kind of a consolidation with just a minor drop. And even if you say that 15th of March is not where it was, let's say 10th of May. So we have had some consolidation in the very recent past. And it seems to me that we are at the bottom of the market and just waiting for some of the risks to unravel. If the risk in China unravels, that could be something that could help us. If the consumer price index or something that the Fed says based on the data that they are seeing is positive, then we could see some kind of movement to the next level and consolidating there and waiting for the next bit of good news. Let's look at Illumina next. Illumina dropped 1.96% yesterday as of close. The MACD is still bullish, but the momentum is very weak. So I don't think Illumina is going up anytime soon. And if you look at IMTX, it's down minus 3.47 as of yesterday. We still have support at 6.84 for this stock. But the MACD is bullish, but the momentum is weak, and that's the only thing that concerns me. And also we have earnings coming up on 25th of May, which is today. So depending on what the earnings turns out to be, we'll either come down and then our support will be 5.93. But if the earnings turn out to be good, then we are going to be moving upwards. Next, let's look at DNA. DNA was down 3.73% yesterday, and it still has support from the 9-day exponential moving average. And the MACD is bullish, but the momentum is still very weak and doesn't seem to be positive for DNA today. Caribou Biosciences was down 3.73% yesterday, and we broke down below a support which was at 8.25. So I'm going to mark that as a resistance. And today pre-market we are at 7.90. So it's already a drop of 1.25% for Caribou Biosciences. Verve is also not doing very well. Pre-market, there are no trades. It lost around 4.24% yesterday. And the MACD is bullish and moving towards the signal line, but the momentum is very weak and below average, so nothing good for Verve out there. CRISPR Therapeutics, unfortunately, has been dropping, and it has converted the support at 53.44 into a resistance, and it has also converted all its exponential moving averages into a resistance. So CRISPR Therapeutics is looking weak here. I'm pretty bullish on CRISPR and really disappointed to see the price action out here. But it is what it is. And our MACD is bullish, tending towards the signal line, and momentum has dropped below average. So it's not looking good for CRISPR Therapeutics. And also pre-market, it's already down 1.11%, that's 58 cents. Not looking good. ARCG is also not looking good. It ended yesterday down 5.07%. Its momentum is below average. Therefore, even though MACD is bullish, it's tending towards the signal line. Overall, ARCG is weak. PACB is down 6.10 as of yesterday, and it's still range bound within the lines of resistance in a very, very narrow range. Today it's at 5.42 pre-market, so it's showing some strength out there, and our resistance that we have here is at 6.03, so the upside is limited to 6.03. MACD is bullish, but momentum is falling, so I don't know if this pre-market optimism is going to be validated when the market opens. So we'll have to check and see what happens. I think that it's not going to open positive. Teladoc is down minus 6.43, and it's still range bound within the two range that we had drawn. I'm going to change the upper range color to red to indicate that it's resistance. And there is only 2 touch points, so it's not a very strong resistance. It's a weak resistance, but nevertheless, it's going to hold us back after the 9-day and the 20-day exponential moving average. MACD is bullish, but momentum is below average and it's falling. It's about to fall out of the civilization zone, as I call it. Bluebird is down 8.13%. That's a very, very big hit, and it's as low as it has ever been in its life. And MACD is bearish and momentum is still falling. So Bluebird, I have to look at Bluebird again closely, maybe a separate video on that. Something bad must be happening out there for Bluebird to be in this kind of a drastic situation. Editas is down 8.21%, and we have the MACD almost intertwining with the signal line, but it's still bearish, and momentum is also bearish, so nothing great is going to come out of it. Pre-market also we are down minus 10%, that is a cent down. So Intelia is down minus 9.32%, and pre-market we are still down another 4 cents, that is minus 0.09%. Beam is also down 10.15% from yesterday. There are no trades pre-market, so I'm expecting that the companies which have been really beaten down yesterday are likely to not lose much today, and the ones which were marginally beaten down yesterday, like Allogene and others, might probably lose a little more today, because as I said, we probably are bouncing along the bottom, and for us to form that trend we need to have a movement up and down within a range. That's likely to happen. So I'm expecting that tomorrow when I look at everything here, Allogene might be at the bottom and Beam might be at the top in terms of the percentage gain or loss that we see, like we have the chart here today. So with that, I would like to end the session today. And if you like this video, please press a like out there. And if you have not yet subscribed, please subscribe for everything related to CRISPR and the stock market. Thanks and have a great day. Bye for now. Okay guys, we are at 490. We need 10 more subscriptions to reach the 500 level and get our community tab. So let's hope and pray that it happens very quickly. So if you have not subscribed, please subscribe. Thanks and have a great day. Bye for now.